Hello traders, welcome back to my channel and to new educational video. Today I wanted to share something that I always pay attention to when I'm doing my day trading. Specifically, as I've always mentioned here, I actively day trade the S&P 500 futures market, the ES symbol on the CME. ES, sometimes I also do micros, but most of the time I'll do the minis, and I definitely follow the order flow related to the minis. And one thing that a lot of people tend to not pay attention to is what specific time of day we are in and how that time is going to be affecting the amount of liquidity, the trading volumes, volatility, etc. that we have going on. Many of you, for example, if you trade Forex, you've probably heard of the Asia session, Europe session, American session, for example. If you're into futures, you know that we have basically two sessions. We have what's called the extended hours, or the Glovex, which is the open at 6 p.m. Eastern, going overnight until 9:30 a.m. the next day. And then officially the U.S. market hours opens for regular trading hours between 9:30 a.m. and 4 p.m. Eastern time. Okay, so the period that the European markets and the American markets are overlapping is the time of day that we're going to have the most liquidity in the markets, and that's going to be right here from 9:30 a.m. to 11:30 a.m. Eastern time. During those 2 hours, we're going to have the highest liquidity during the day. And then right at 11:30 a.m. Eastern, when Europe closes, I tend to observe that there's usually some kind of change in shift in terms of momentum, or even in terms of the trend that we have going on for the first 2 hours of the regular session. Okay, so in this video, I'm just going to walk you through several examples and observations so that you can go into your charts and apply this into your own trading to see if this is something that is going to help you out as well. As always, I use a lot of confluence factors, but the time of day for me is something that's pretty important as well. So here I have an indicator here on, this is Sierra chart, but I mean, you can use any platform. If you're on TradingView, just go into S&P 500 chart and just go to 11:30 a.m. Eastern, and you can mark it with a vertical line over here. I'm going to make this line thicker just so that it is easier to see on the screen there for you. Let's see. Well, I guess I'll just leave it as a dash right there. So you can see every time you see this dash lines on my charts, this means this is 11:30 a.m. Eastern time, and this is the closing of the European markets. This one, just ignore it, because this one was a holiday, on a Monday holiday, so the U.S. markets were not open, so that's why it doesn't look like a regular profile. Okay, but so then let's just start going back. As you can see, as always, this is my session profiles. The ones in blue are the extended trading hours. The ones in gray are regular trading hours, which is where we're going to focus. This is a 3,000 tick chart. I usually use either a 5-minute chart or a 3,000 tick chart when I'm day trading. Specifically, I prefer the tick charts because it filters out a lot of the noise that we have, especially during highly volatile periods. And then down below here, I have the cumulative delta. This is basically measuring the aggressiveness of traders. This is executed market orders to buy or sell. And this is useful for me to look for divergences in price and also to identify when aggressive traders are getting absorbed or they're getting caught on the wrong side of the market. Okay, so first example, and again, these examples, I just went back a few days and I just circled in yellow here a few examples that I'm just going to talk over, but just so you can see why for me it is important to be tracking this time of the day. So as you can see, this session started right over here. We pushed up, then we went below VWAP, started trending down. Then we started bouncing up right around 10:30 a.m. right here. And then this area right into the Europe close, you can see that during this period, the delta, cumulative delta started going more sideways and price as well just started sort of consolidating. So we did have a push down and a push up. And then here during the Europe close, we had a period of just sideways consolidation. And then right after noon, when the lunch hour started, which usually it's also a drop in liquidity in the U.S. markets as well, that period pretty much between 11:30 and 1 o'clock or 1:30. And then you can see that things just ramped up and then we took off from there. If we go back, this is another day, and here you can see same thing. We had the market trending down and then mostly moving sideways. Then we made this stab down over here, and then you can see right into the London close here, the Europe close, and that pretty much set the low for this area right here before we had another push up. And it wasn't until much later, almost at the last hour of the day, trading day, that we were able to come back and break those levels. But as you can see, market trended down, and right at the London close we found this consolidation and support. We made a nice defined high volume edge here, and then we just pushed back up there. Some days, it doesn't really affect it. For example, here, this was an extremely bullish day where pretty much market opened and trended the entire day. You can see we just got close to VWAP one time, but this was the Europe close, and you can see we did have a slight pause there. We pushed up, Europe closed, and then we had pretty much sideways action here through the whole lunch hour until finally the trend started continuing again. You can see we did have a divergence here, aggressive selling, making a lower low right here on the cumulative delta, and yet price here we made pretty much a double bottom. So that means that right in this area here we had a lot of aggressive selling going on in this period that was absorbed by large limit buys, and then we pushed up. But again, it was right around the Europe London close that the market sort of took a pause and started consolidating here. So usually you'll see some kind of changing flow. Even if the trend continues, there'll usually be some kind of change in the way in the flows and liquidity in the market. Over here in this day, you can see pretty much the high of the day here for this session, what marked off right into that 11:30 Europe close. Market pushed up, and then right around this time we had the turn. Then you can see very aggressive selling came right into here, and then we just started pushing. Another divergence here with cumulative delta. You can see aggressive buyers pushing this up, and yet the price was just basically making a lower low while we were making a higher low here. So that means the large limit orders are in control here, just absorbing all this aggressive buying and pushing price lower. If we keep going back, you can see like this day was pretty much a balanced day, and we didn't really have any significant change here. It was pretty much a day of bouncing between a range, as most balanced days commonly are. If we keep going back, right here on this day, this was on a Monday. And of course, you know, this turning points, usually when we have an important turning point, there's obviously other factors we look in here. Like, for example, we had this balance profile on the overnight, the extended hour session, and you can see we opened, and multiple times we tried to break these lows from the overnight, and we just held and held. And then right here, pretty much right when Europe closed is when things started ramping up. The aggressive buying started picking up. And then once the limits, the passive buyers and sellers and the aggressive buyers and sellers get in sync, then that's when the market is going to move very fast and aggressive, as we saw here. But you can see pretty much right at the Europe close marked the exact moment that the market started ramping up, and we just started trending up for that day. Okay, here's another day again of having a pause mid-trend. During that closing, you can see we're pushing up. Then we had a consolidation phase right around that Europe close, and then market eventually started moving again. Right here you can see price, we opened, push up, and then a reversal. We got back below VWAP and rejecting VWAP. The cumulative delta is heavily negative for the day, right, pretty much almost right from the beginning. And then you can see on this pullback right here, we made one attempt to get back into VWAP to break out right at the Europe close, and we just started turning very negative on the delta and the selling, and pretty much we're also retesting this broken support here, now retested as resistance, and then market just kept going down. Okay, I think that's pretty much it for what I was going to show on the video. Here you have another example as well. Market push up, then trending down, and then right here we had a lot of consolidation here, pretty much for 3 straight hours almost of sideways action. But you can see that the exact low of the day was marked right at the Europe market hours close right here, and then we started from that moment on, started pushing up, making higher lows, etc. Okay, so that's pretty much it for the video. Again, I just wanted to show you, for me, this is one of the main factors that I look for when I'm day trading, 11:30 a.m. Eastern. I'm always paying attention for potential reversals or changes in trend and momentum. Once the Europe market close, volumes are going to go down a little bit, and that's a important time during the day to pay attention for, again, for changes in the momentum or trends. Okay, hope you enjoyed. Have a great week, and I'll see you all in the next one. Take care.